This book is called EPS Ratio for Beginners. It will be a general overview of the EPS ratio. The first chapter goes over the calculation of the EPS ratio. Next up is an actual balance sheet example, and the last step is the limitations page. Now, a quick disclaimer, I am not a financial advisor, so take what I say with a grain of salt. You are in charge of your investment decisions, and I'm not liable for any of the losses or gains based on your decisions. Now, let's begin. The first step is the calculation of the EPS ratio. I'll walk you through its formula and what it is composed of. EPS is equivalent to earnings divided by the number of shares outstanding. Earnings is equivalent to a company's net income, which is also equivalent to a company's revenue minus its expenses divided by the number of shares outstanding. In general, revenue is how much the company makes, expenses is how much the company spends, and shares outstanding are the number of tradable shares in the open market. Now let's walk through an actual balance sheet example of a company called Apple. Now remember, this is not a recommendation to buy, sell, or hold Apple. It is simply an example of how to use Apple's balance sheet to calculate its EPS for a given quarter. Great, now let's walk through Apple's financial statements to calculate the EPS ratio. So to search for Apple's earnings, we can do Apple Investor Relations. This will lead us to Apple's Investor Relations page. Once we click on that, we can go down to Apple's financial data, and here we can see the quarterly earnings report. The most recent earnings report is Q2. However, given the values, I'm actually going to be going over Q1, which is a clear example of differing EPS values. Once we click on financial statements, we can see that the Apple condensed consolidated statements of operations is right here. Here we have Apple's net sales, cost of sales, operating expenses, operating income, net income, earnings per share, shares used in computing earnings per share. Here we can see how much Apple made in this quarter and how much it costed. How much Apple made is actually its net sales. Here we have that from its products, Apple made $96,458 millions of dollars. From its services, it made $23,117 millions of dollars, and thus its total net assets, which is composed of products and services, is equivalent to $119,575 millions of dollars. Now, this is the net sales. How much did this cost Apple? Here we have the cost of sales. So the cost of the products, right, is going to be $58,440 millions of dollars. The cost of its services is going to be $6,280 millions of dollars. So the total cost of the sales, which is equivalent to the products plus the services, is equivalent to $64,720 millions of dollars. And once we subtract the total cost of sales from the total net sales, we have $119,575 minus $64,720, which is our gross margin, or $54,855 millions of dollars. On top of that, Apple also has operating expenses. These operating expenses include research and development, which is $7,696 millions of dollars, and selling, general and administrative, which is equivalent to $6,786 millions of dollars. Apple's total operating expenses were $14,482 millions of dollars. Thus, Apple's operating income, which is the gross margin subtracted by the total operating expenses, is equivalent to $40,373 millions of dollars. Alongside that, Apple had other income or expenses, if it's in parentheses, and given that this $50 millions of dollars is in parentheses, then this was a cost. So if we subtract 50 from $40,373 millions of dollars, this leads us to Apple's income before provision for income taxes of $40,323 millions of dollars. Lastly, we incorporate the provision for income taxes, which was $6,407 millions of dollars. So Apple's net income is $33,916 millions of dollars. So that is going to be the earnings in our earnings per share value. Now the number of shares that we're going to be using is actually right below the EPS. Here we have shares used in computing earnings per share. So the basic number of shares are going to be 15,509,763, and we can tell that this is going to be in thousands. Here we can see that except number of shares, which are reflected in thousands. We also have the diluted number of shares, which is going to be 15,576,641 thousands of shares. So now that we have these values, let's walk back to the calculation of Apple's EPS. So we know that we should be getting 2.19 and 2.18. Now let's take a look and walk through this step by step. Now let's insert the values into the formula. EPS is equal to revenue minus expenses divided by shares outstanding. Apple's revenue is $119,575,000,000. Its expenses are $85,659,000,000. And its numbers of shares outstanding is 15,509,763,000 shares. This leaves us with an EPS of $33,916,000,000 divided by 15,509,763,000 shares, or $2.19. Now let's calculate the diluted EPS. So we have the same formula, revenue minus expenses divided by shares outstanding, but now we use the diluted number of shares. The diluted number of shares outstanding are 15,576,641,000. Implementing this value into our formula results in a diluted EPS of $2.18. An EPS of $2.18 means that for each share of common stock outstanding, the company has earned $2.18 in net income over the corresponding quarter. So a positive EPS means that a company is making profit. On the other hand, a negative EPS means a company is not making profit. However, there are also some important limitations to consider with the EPS. There are likely more limitations, however, I will go over 3. The first is a company's ability to manipulate earnings. A company can delay or defer expenses to future periods, which will boost the current EPS. This can include postponing necessary maintenance costs, R&D expenditures, or marketing expenses. Another limitation is a company's ability to control the number of shares in the calculation. If a company decides to increase its number of shares, it could thus decrease its EPS value. On the other hand, if a company decreases its number of shares, it can increase its EPS value. Lastly, there's the concept of changing conditions. The COVID pandemic is an example of when a company's prior earnings may have been positive and the pandemic led to their costs exponentially increasing, and their earnings could potentially become negative, in which case their positive EPS ratio would make the company seem to be profitable until the next quarter, when the earnings actually turn negative, which could lead to a drastic change in sentiment regarding the company. A quick note regarding credits before my ending note. Thanks to Slides Carnival and Unsplash for the free resources. And that brings us to the conclusion of this Investinality book and the beginning of your next path of learning. If you want to learn about how the EPS is used to calculate the PE ratio, click on my video below. Make sure to subscribe for more videos coming up soon. Happy investing, and until next time.